Hi, this is Joseph. Today is December 3rd. It's Tuesday, 2024. This is a review of the trades that I executed with the Trade Copier EA. What the Trade Copier EA does, it duplicates all of my trades. So every trade that I'm going to show you today are trades that went into my own personal MT4 account. And if you're using the Trade Copier, it's on my platform. So when I execute a trade, when I open it, it'll open that trade at the same location for you. You specify the lot size. And then when I close the trade copier will close the trade for you. You don't even have to touch it, and you'll see profits. Occasionally I have a loss, but I can earn the loss back on the next trade or two. And the losses are relatively small. As you'll see today, you'll see the size of some of the trades. So this was the pound dollar. The total number of pips that I earned today was 239 pips. It's a lot, but I don't do that every day. I want to make sure that everybody knows I can't do that every day. Like there are some days. Lately, it's been pretty good in forex, and I've had some really good trades. I traded five different currency pairs. I'm sorry, four different currency pairs today. I'll show you each one of them. And on some currency pairs, I'll have two trades. On some of them, I'll have one trade. And then, for example, I haven't traded the dollar Canadian in a while. So I may go back, when I see a really good setup. It just depends on the pattern, the setup, and what I'm looking for. I'm looking for the basic same setup that I look for every single day. So again, 239 pips today. It is a lot. I'm not double counting. It's from the entry on the chart to the final target. And again, I can't do that every day. Sometimes, on certain days, I may have only one trade. The important thing is that the trade copier will execute all of these trades for you, hands-free. You can be asleep when I'm taking these trades, and the trades will still be executed for you if you're using the Trade Copier EA. So if you go to my website, you can either subscribe, get a 1 year subscription, and copy all of my trades. Right now, there's a holiday discount on the Trade Copier, or you can just download it and take a look at it. Take a look at the features. You won't get any of my trades, of course, but you'll be able to look at it and connect it to your MT4 account. You can see the lot sizing. There's a feature where you can specify the lot size that you want on there. So the lot size is generally about 30 pips. It might be a little bit larger. It depends on the currency pair. Maybe, if I trade the pound yen, I might have a slightly larger stop loss. But the important thing is that I never use a stop loss that's over 50 pips, for example. So you could specify that and put that in the trade copier. Now, if you don't know what I'm talking about, that's okay. I have a video that will walk you through the instructions on how to set up the trade copier, connect it to your MT4 account, and then how you can specify the lot size and things like that. That way you can ensure that there's always going to be a stop loss placed on every single trade. I execute, with every trade that I execute, I always put in a stop loss. But I know that other services out there, I've been doing this for a long time. So I started offering trade copier services back in late 2007, 2008 to my chat room subscribers. Because some of my chat room subscribers couldn't be in the chat room at all times. So I figured out how to put together a trade copier. Back then, we weren't using FX Blue. I was using another program that one of my chat room subscribers had coded for me, the trade copier. But anyway, so I've been doing this for a long time. I know a lot of other services, they won't use a stop loss. So you have to be careful when you consider using some of these companies that offer trade copy services or services where they'll execute the trades for you. A lot of them may not be using stop loss, and you don't want that. There should be a stop loss with every trade. So let's take a look at the first trade. There was two trades here on the pound dollar. The first one was to the downside. I entered in at 1.2659, traded it to 43. So that first trade was 16 pips. Wasn't a big trade, but it was a decent trade. I mean, you can see what was going on right here. We were in a downtrend during the overnight session, and then we start to move our way back up, and we go into consolidation right here. It's just a pullback at this point, considering what was over here on the left. And at that point, I was able to see, this is a clear level of support. It's kind of a ledge. These ledges are often tested, and then very often it depends on the direction of the trend. It can be broken through. It's another area to get into the trade. So as soon as it broke through, I was able to short that, and then I held onto it. 5-minute chart. Again, this is a 5-minute chart. And I held onto it until it reversed and went right back up. I figured it was going to take out that low, but I didn't know if it was going to continue. And when it reversed and started to come back up, that's when I shut it down, and I thought it was going to reverse and go back up. I did not participate in this move right here. I had 1, 2 moves. I wasn't too sure if it was coming right back up and it was going to come back down again. And then when it broke up to the upside, here is my breakout. So I've got a breakout. Now I've got 2 moves to the downside. higher low. Everything is shifting at this point. You can see the whole pattern. And then, of course, going to the larger time frame with this much time passing, I was able to see that we're probably going to go back up here to areas of resistance. So this was another trade taken long. So the first one was a short, next one was a long, 2681, and that trade paid 13 pips. Now, I didn't reverse positions. At this point, I was done with this pair. I wasn't going to trade anymore, and I wasn't too sure how this was going to turn out. I guess I could have traded it, but I was focusing in on other currency pairs. So again, the two trades here, the total pips on this one was 29 pips for the pound dollar for the day. And then I had one trade here on the euro dollar. So on the euro dollar, I just took one short. I didn't trade it back up. I didn't trade the same move. The breakout here, it is a breakout, but it wasn't as clean as you saw with the pound dollar. This one was already up here at areas of resistance. So I thought it was probably going to be more or less one of those vacuum moves where it was going to stop. Once I was done with this trade and I was done with the pound dollar trade going to the upside, I stopped looking at this one altogether. I wasn't going to even look at this one. And you'll see the other two trades that I had. So this trade, the euro dollar, was just to the downside, and I earned 13 pips on this one. So again, it cleared areas of support, reversed, went back down. Started to go back up. And when it reversed, that's when I closed out the trade. So this one was 13 pips, just one trade on the euro dollar. The next pair was I'll show you the euro yen. So the euro yen, so some of you have seen me do this before if you watch some of my older videos or some of even my more recent videos. When I'm looking at the larger time frames, especially when we're in a significant trending move that you can see on the larger time frames, uptrend or downtrend, whichever direction, I'm also looking for gaps. I know a lot of ICT traders will call them fair value gaps, things like that. These gaps have been around for a long time. They've been around for as long as trading, online trading, and long before that, since any kind of trading that people have written books about, there's always been the discussion about these gaps. So they're nothing new. So I'm not doing anything new, is what I'm trying to say. But different people, depending on what they learn and who they learn it from, will either call it something different or do it in a slightly different way. But at the end of the day, I think most of them are probably going to be pretty much the same thing. You can see when I traded this reversal here on the euro yen, 5-minute chart. When I traded this reversal, this is really clean. This is really obvious right here. So this is sort of that exhaustion move. It's not a measuring gap. It's more of the exhaustion type of gap where it's going to reverse and it's going to go back up. It's not a sell signal. So if you look at these bars right here, I used to make this mistake a long time ago. I would look at a higher time frame and see something like that where it was closing strong, and I would think it was a sell because it's breaking down areas of support, but it's not. Very often, if it's sitting right at that support, a key support level over on the left, it can be a reversal, a strong reversal like this. So I saw that one setting up as I took a look at this chart. The other thing that I was aware of is, let me go to the larger time frames, and you can see there's a gap right here. So this gap is what I was watching price since last week and earlier this week. I've been watching price come back down here to this gap area. This is the daily time frame now on the euro yen. So there's a gap down here from this breakout bar, from that pullback low at that wick to that hammer, that little hammer, bull hammer right there that you see. There's a gap. And obviously, not all gaps are going to be filled right away, but I leave it on the chart. And I know that as we start to make our move, over the last couple of days, we start moving down. I see that gap right here. So now we're back at the 5-minute chart and I can see that gap. So we're starting to move through it. We sweep through that and then we reverse. So this is that exhaustion move. And then we close right back up. This is also a bar, this 5-minute bar right here, this bullish bar. It's one that I refer to as a clamp up bar. It's a specific setup. It's not really all that important for this video, but it's just one of the bars, one of the signal bars that I'm looking for. I look for ABB bars or clamp bars. They're either up or down. They're bullish or bearish, depending on the direction. So everything's lining up for me right here. I get into the trade at 156.56 and I get out at 157.13. So I was able to earn 59 pips on this trade. But trading it back up, there's another gap. There's the breakout bar right here. There's a gap, these two lows, And then the pullback right here, you can see the wick. So there's an open gap right here, and it wasn't filled on the way down. So we start to move our way back up. We get close, we pull back down. It's testing the breakout again, this level right here, and then it pulls right back up. So I did sit through this pullback right here. I don't like sitting through the pullbacks, but there was nothing wrong with this pullback. It was pretty contained for the most part. As far as if you're aware and not thinking, um, it's pulling back too deep. It was kind of deep. In some cases, I would. So let me put it this way. Let me rephrase all of this. Years ago, when I would see a trending move like this, and I had a specific target that I was well aware that it's not just me that's looking for this target, it's also computer programs are looking for these targets, and also measured moves. So professional traders that know, a good deal of technical analysis, they're looking for these measured moves. These are also considered measured moves very often, and that's why we see price stop at these levels. So there are some computer programs that will run off of these measured moves, and they're also aware of these gaps. I'm not the only one using them. Everybody's using them that is aware of them. So when I would, years ago, when I would be in a trade like this and I saw a pullback, I would get scared out of the trend. I would get scared out too soon. And there was still more money to be made on the trade. And then as a result of that, I would think to myself, well, how do I get more of these trades? This was years ago. So I started doing some research and some study, and there's some gentlemen that had written some books on trends and the consistency of the trend. So the bottom line is that a trader really doesn't understand a trend. This is just one theory, right? This is just one way of looking at it. This is what I told myself. A trader doesn't understand the trend until the trader understands counter trend movement. And the reason why I say that is that you can get scared out of a counter trend move too soon, which means you give up a lot of the profits in a trade. Now, this one was pretty deep and it did stop. It didn't go a whole lot further, but it may continue. But in some instances, on a pullback like this, we get a pullback that looks like this, and then it resumes and it just keeps going higher, right? And I would give up all of this profit. So that's why I say that the pullback was pretty contained. So I started to study. I spent many years studying the reversals, or I'm not going to call them reversals because it's just a pullback, but I should say the pullback in an uptrend. So this doesn't scare me like it used to. So I didn't give up on the trade. I was looking at the trade to make sure that it was contained and that it was doing everything that I expected it to. So there are things that it's doing that I expect that I can sit back and go, okay, well, it's just a pullback, and then we've got a second leg. It's a two-legged pullback. That low right there tested that high right there with the breakout on the way back up. So I expected it to bounce and probably move back up. Now, if I'm right in analyzing and finding this gap right here, and I'm thinking that other professional traders are trading to it and computer programs are trading to it, then that's likely to resume, and that's exactly what it did. It went right back up there, pulled back, and then that's where I closed out the trade. So that's why I was able to hold on to this trade a little bit longer. This isn't normal for me to sit through a pullback like that, but it was more or less contained. Based on my understanding of a counter trend move. So this is the trend, the move on the way back up, right? And this is the counter trend. So it's really important to study that. If you're going to be manually trading, spend a considerable amount of time understanding counter trends. If you find that you're getting out and scared out of trades during a trend and you're not able to participate in the rest of a big trending move, or you're leaving a lot of money on the table. That's what I was thinking about my trading years ago when I started to study this. And I started thinking there's got to be a way to get more of this movement. So the same behavior here that I'm looking at on the 5-minute chart, I can do the same thing on a daily chart. I can do the same thing on a 1-hour chart or a 4-hour chart. It's fractal. So I can do the same thing and participate in a bigger overall move, even though I may take pieces of it on an intraday basis with the trade copier to make sure that I'm getting 50, 60, 30 pips, whatever the case might be. So on this trade right here, I got 59 pips on this trade alone. So it was just one trade. I just traded it right back up. I saw this was really easy. This move right through that gap that I showed you on the daily time frame. I waited for it to clear, and then I expected it was going to reverse. Once I got the signal, I thought we were coming back up here to that gap. Now, the last trade that I want to show you, the last two trades, are on this currency pair, the pound yen. The pound yen was pretty good. I didn't trade anything on the dollar yen today. So the pound yen, I did trade it to the downside. And again, you can see another shaded area here on the 5-minute chart, which is another gap. So I'll go back to the daily time frame. There it is again. So it's pretty much the same opportunity. I'm looking for a gap. You can see it. Let me open this up just in case you can't see it. So here is a breakout move. There is a pullback. You can see that hammer. There's a gap from the high and that pullback move right there on that bar. So this creates a gap. Well, that gap was not filled. Doesn't guarantee and doesn't mean it's going to fill. I don't know how soon it's going to take or how long it's going to take. This is a clear channel. It breaks above, pulls back, tests the channel one more time. This goes back to the beginning of November, and then we start to break down, and now we're in a downtrend. We come back down, break through that channel, the lower end of the channel, and we sit right on top of that gap that was filled at this point, and that was done yesterday and today. So again, going back to the 5-minute chart, I was able to, let me go back over here. I was able to short this. This was a lot easier for me to see. So let me also tighten this up. And you can see that we're breaking down below this morning's low on my chart. Might look a little bit different on your broker, but this was after the rollover. And here we're breaking down. I've got a full breakdown bar that closes at the low of that bar. That is also another opportunity for me to sell. It's a strong bearish bar closing right at the low. There's hardly a wick at all. So I get in on that trade right there when that bar closed on the next bar. So my entry was at 96. And I traded this for the first trade that I earned. The first trade I took on this one was a sell, and I earned 62 pips on this trade. Now the reversal. So we went through that shaded area. We filled the gap just like we did on the euro yen. It reversed, and I get my clamp up bar again. So here on the next bar, I get in. I get in at 53. I trade it right up here to the areas of resistance. It starts to go sideways. And this second trade, I earned 76 pips from that entry. This was a long. So the first one was a short. The next one was a buy. And I traded it right in here and right about the time when it started to go sideways. Once I saw that gravestone, it's almost like a gravestone doji right there. It kind of looked like it was going to go sideways. I didn't think it was going to go up too much higher. And we had already gone right back up to the level that it broke out of. So at this point, I'm done with the trade, 76 pips. On this pair, the pound yen, I earned 138 pips. So for the total, for the entire day, all these trades were executed with the trade copier. So that means all of my subscribers were able to get these trades. So there's 239 pips for the day. Now, that could mean, it depends, because you specify the lot size that you want to use with the trade copier. If I trade one standard lot, you may want the trade copier to trade one mini lot or a micro or any combination of whichever one you want. You specify that, so you control it. But let's say, for example, if it's a mini lot, maybe $1 a point or approximately on average, dollar a point, 239 points for the day, that's $239. Standard, about $10 a point, right? So that could be $2,000, well over $2,000 for the day. So 239 pips is what I earned today. That's not double counting. It's just from the entry to the target and then a buy to the target. 4 currency pairs, a total of 5. I've got 4, 5, 6 trades today, 239 pips today. Now, if you want to get trades like this, you can get trades like this hands-free. Once you connect the trade copier to your MT4 account, you don't have to do anything. You can still trade your account if you want to. It won't change or offset any of the trades that I have. Just pay attention to the leverage if you're going to have multiple trades open at the same time. Just be aware of that. That's the only thing. That's on you. You specify the lot size. But if you want to set up an account and use my trade copier, you can just copy all my trades and not take any trades if you don't want to. And these trades will be executed for you every single day. Again, whether you're at work, you're sleeping, even if you're on vacation, I'm trading every day. If there's a bank holiday, I might not trade. But if you've got the trade copier, it doesn't matter. I might see a good trade. I'll take the trade if I'm there, right? So again, US bank holidays, I generally try not to trade, but sometimes I can't resist it if I see a really good setup and I'm not. If it's not Christmas and if it's not, Thanksgiving or New Year's and it's just like some regular holiday like 4th of July, it shuts down for a little bit, but then I come back and I watch it 4th of July in the evening in the United States here. And sometimes I'll get a trade at like 9 o'clock California time in the evening. But again, if you have the trade copier on and you're asleep, it's just one of those trades that you'll get when you wake up and you'll see it in the morning. So again, go to my website, subscribe. You'll get the holiday discount. You can save $200 on the trade copier right now. January 1st, it goes back to the regular price. You'll get all these trades hands-free. If you need any assistance with the setup, we can help you with that too. There's no extra charge for us helping you connect the trade copier to your account. If you've ever installed an EA on your MetaTrader platform, you'll know exactly how to install this. It's pretty easy to do, and we have instructional videos on how to set it up.